All right. Good evening, everybody. My name is Daniel Sines, Senior Business Development Officer with the Los Angeles Police Federal Credit Union. I want to thank you all for attending tonight's Understanding Credit webinar. Before we begin, we just have a couple of housekeeping items. Just wanted to let you all know that this webinar is being recorded and it will be emailed to you after the fact, most likely by tomorrow. You will also see that there's a handout attached to this webinar. So if you want to follow along with your handouts, you can do that as well. And if you look at the end, I'm sorry, the right-hand side, you should see a question area on the drop-down. And at the end of this webinar, we'll be addressing any questions that come about. So feel free to use that question and answer area, and we'll address those at the very end. And at this time, I'd like to introduce Ray Upchurch with Balance. Take it away, Ray.
Thank you so much, Daniel. Welcome, everyone, to Understanding Credit. I have to tell you, this is probably one of my favorite presentations simply because the information is applicable to all of us. It's always applicable. And, it doesn't matter how old you are, it doesn't matter how much education you have, how much life you lived. Honestly, we all need this information, and none of us are, I would say, we don't have the answers just because we've reached a certain point in our lives, or we are a certain age, or, so that's why it's one of my favorite presentations. We are so happy that you guys could be here this evening. It looks like a lot of you are still kind of trickling in. So again, welcome. So my goal for you tonight is to kind of help you get an understanding of how credit works, um, to determine what's a good credit score, maybe how to improve your credit score. And then, of course, we have to talk about some money management behaviors that can help you in your quest. Okay, so before I move forward, I'm going to go ahead and turn my camera off because I like for you to have a nice big screen so that you can see the entire presentation, and Daniel will also leave too, and we'll both come back when we answer those questions at the end. At the beginning of presentations, I have this question that I have to ask because I need to know why you're here, because I want to be able to answer some of those questions. I want this to be meaningful for you. So I'm going to go ahead and launch our first poll. And our first poll question is it says, I am here today to learn, and please choose all that applies to you. So are you here today because you want to learn how to establish credit? You want to know how to view your credit report and get a better understanding of your credit score? Maybe you're here because you want to fix your credit score. You want to increase that number. You're going to be making a purchase soon and you need a nice, healthy credit score. Are you here because you want to improve your spending behaviors? Or maybe you're here because you just like to learn and none of these apply to you. So go ahead and vote. I'll give you maybe 5 more seconds. It looks like 57%, 61% of you have voted so far. So thank you for your participation. I'll go ahead and close this vote down in 3, 2, and great. You just got that last one in, 87%. I love it. So I'm going to share the results with you, so you also can see who and why others are here. So it looks like a lot of you, it says 50% are at how to increase and fix, and 50% said how to improve my spending behaviors, 20% how to establish credit, 30% how to view my credit report and get a good understanding, and 20% of you said, none of these reasons. And I'm glancing over in the questions box, and it looks like a participant said, I'm here for knowledge, and I am very hopeful to give you that knowledge. All right, so let's talk about credit. We're going to explore the what's, whys, and hows of credit, right? So by the time this webinar is over, I'm hopeful you'll be able to answer these 3 questions. What is actually in your credit report? Why does good credit matter? And how does credit actually work? I also have some what I call tips and tricks, some different behaviors that you can kind of use to help boost your credit score. And I'll kind of go through those as we move forward. Okay. So, why does good credit work? So, if you have good credit, you may be eligible for some of the best interest rates and terms on things like car loans, mortgages, if you want to buy a home. I see someone's already said they're here because they're looking to buy a home soon. Credit cards, personal loans. And the truth of the matter is that credit costs. Credit can cost you a lot of money if you have credit scores on the lower end. Having a credit score on the lower end might also mean that you don't get approved for a loan at all. So you have to do whatever is necessary in order to get by or make those means so that you can achieve or obtain those loans. Or with a nice healthy credit score, then you can pay little and in some instances, no interest on a loan. Okay. So again, cost of credit, we're talking car loans, mortgages, credit cards, and even personal loans. We also know that good credit matters because of insurance costs. So you would probably be surprised to know that it's not just lenders. It's not just LAPFCU. It's not just all the different banks and mortgage companies out there that are using your credit score to make decisions on loans about you. It's also um, employment opportunities. So it's potential jobs, right? It's cost of insurance. You have to get insurance for that car loan. A lower credit score could also mean that an insurance company would say that their risk is higher with you. Okay. And as it relates to housing options, if you're looking to rent, your landlords might say, a part of our background check is a preliminary credit check to make sure that you haven't had defaults previously. Okay. So, yes, there is a role that credit plays that can cost you lives. Let's talk about the role of credit bureaus. So, the three credit bureaus, Equifax, Experian, and TransUnion, um, they are to compile information and then they send information from creditors to any entity that is requesting that information. Okay. Their goal is to provide credit reports to businesses that have a legitimate need. So the three credit bureaus, again, Equifax, Experian, and TransUnion, we're going to come back to this. Those creditors are going to report the credit activity to the bureaus. The bureaus are regulated by Consumer Financial Protection Bureau. Lenders use that information that the bureaus give them to, again, decision loans, but your report can also be used by landlords, employers, insurance companies, colleges, and universities. I didn't mention that on the slide previously, but getting into higher education. I know someone who was going into a master's program, and they told me a part of the acceptance was there was a credit check. Okay. So like I told you, it costs and it's very important to our lives. I'm told that LAPFCU, when they are decisioning loans, they actually use primarily the Experian report. But we always say make sure that you're checking each of those credit bureaus for accuracy because accuracy is important. Very quickly, if you could find on your webinar control panel where you can raise your hand. I'd like you to raise your hand if you currently subscribe or use a credit monitoring service. Any of you? Okay, cool. I'm seeing some hands. I'm going to go ahead and lower them. So, one thing that we like to say is that Even if you do have a credit monitoring service, you should still review all three of those reports. And minimally, minimally once a year, three times a year is even better. And I'm going to give you some more information on some upcoming slides, specifically how you can monitor your credit report. And we'll talk about what LAPFCU has for you to also just make sure that you're monitoring. Okay. So, how does the power of time affect your credit report and score? Well, negative information on your credit report, the good thing is it does not stay forever. So most negative info, it's going to be reported for 7 years. So if you had some challenging times in your life, maybe a bout of unemployment and you just had to make ends meet, or you just weren't very aware of how credit works, and now that you have some kind of cleaning up to do. It's good to know that negative information, 7 years. Okay, now if you have a chapter 7 bankruptcy, that's going to be reported for 10 years. If you have accounts that have gone to collections, it's reported from 7 years, but that 7 years, that your time starts on the date of that first delinquency. Okay. So if you have a creditor who has sold your debt to a collections agency and it's moved around quite a bit, your time starts again at the date of the first delinquency, and it's going to be on your original account. All right. Now, the good news is that if you have positive information, it can remain on your credit report indefinitely. Okay. So that's the reason, and I'm going to talk about this. That's the reason why you don't want to close credit accounts. Again, negative information is going to fall off. Closing a credit account is not going to make the negative information disappear. It will, however, delete all of the positive information. So you want to make sure that you keep those accounts, your longest accounts, opened accounts, open for as long as you possibly can, because you want to keep that positive credit on your report. Your FICO score, it's going to emphasize the last 2 years of activity. And that's why we'll talk about inquiries in a little bit. And just very quickly, an inquiry is a look into your credit report to view history, your credit score by a lender. Okay. So when we say hard inquiries, it means you have given someone permission to look at your credit report in exchange for maybe a loan, a credit card, or to basically to take out some new credit. That's considered a hard inquiry. You checking your report, your credit report for errors, or just seeing your credit score, that is not a hard inquiry. Okay. All right. Um, Now, your FICO scores range from 300 to 850. And if I could say this real quick, there's a lot of different credit scoring models. FICO is still the top credit score model as it relates to making decisions on like mortgages and auto loans and that sort of thing. Okay. Um, the major portion of your credit history, or your credit score rather, is going to be made up of your payment history, and that's 35%. The next one is 30%, and that's the amounts owed. 15% goes to your length of credit history. We talked about inquiries, so new credit is going to be 10%, and types of credit used is also 10%. So this is the what I like to say, it's the anatomy of a credit score. So if you're not satisfied with the way your score looks today, these are some of the actions that you can take to improve it. Um, If you have any old delinquencies, the best way to improve is to repay them. Okay. And then I told you that 35% of your credit score is based on payment history. So the way that you keep your credit score healthy is to pay on time every time. All right. You also want to try to reduce your debt load. That's where 30%, again, that's where that 30% is going to be based on. So if you have, let's say you have $10,000, and I'm just using round numbers because they're easier for me. So let's say you have $10,000 of um, credit, and of that $10,000, you have 2,000 available, which means you're using $8,000. So that means 80% of your credit is unavailable. Only 20% is available. That's the sort of thing that's going to bring your credit score low. So we say keep balances lower for sure than the limit. So try to keep them at 50% or less. And as it relates to your entire credit profile, if you can get your debt load to be somewhere at under 30, and I'd say even 20%, that's going to be really good for, I would say two reasons. It's going to be really good for your credit score, but it's also going to be good for your lifestyle because then you won't, and we're going to talk about this in a second, but you won't be spending a significant amount of time and money in the paying off debt cycle. Okay. So, again, keep your balances low, 50% or less. If you can shoot for under 30%, even better. You also want to limit the number of accounts that you're opening. This is now, I did the research on this actually very recently because I wanted to know how many points will my credit score decrease by opening a new account. And according to Experian, actually, somewhere between 5 or 10 points for each new account that you open. But I can tell you that's just average. I've seen a drop lower than that for myself. So you definitely want to limit opening accounts. So here's a scenario that I see quite a bit, which is you're doing some retail shopping and you get to the register and the salesperson asks, would you like to save 10% on your purchase today? Right. And hey, if you're me, you love saving money, even if it's just 10%, that's taxes and plus a little bit more in my state. Uh, but what comes along with saving 10% is applying for a store card. So applying for a store card. So you have now opened a new account that you possibly don't need. You have a new line of credit that is available for you to spend that maybe you had no plans on spending in the first place. And I don't know if you know this about store credit cards, but they carry some of the highest interest rates. We're talking 26, 27. I see 29% interest. Okay. So just think about that when you are asked that question the next time. Do you want to save 10%? Just know that it is going to be detrimental to your credit score. If you are like the person in the questions box who said, I'm here because I want to buy a home someday or someday very soon, the last thing you want to do if you are looking to, uh, you know, get a loan, whether it's a car loan or personal loan or even a mortgage, specifically a mortgage loan, the last thing you want to do is open new accounts. Okay. Next on our list for improving your FICO score is avoiding maxing out your account. So remember, that goes back to keeping your capacity open and your available credit line higher. You want to keep your old accounts. I breezed through that briefly on a slide previously. Again, keeping your old accounts means also keeping your positive history. Even if you have an account that you weren't in good standing on, but eventually you got back on your feet, you eventually paid it off. And I know the mindset sometimes is, oh, this credit card debt is going to be the death of me. As soon as I pay it off, I'm just going to close it. Closing it is not going to be helpful to you. Now, what you could do is, soon as you pay it off, you just get rid of the physical card so that you don't use it anymore. But you definitely want to keep those old accounts open. Again, remember, positive payment history is going to remain indefinitely. The next one is you want to avoid unnecessary balance transfers. And kind of for the same reason, if you're constantly transferring balances, and there's a number of reasons here, but if you're constantly transferring balances, then that's also going to show negatively on your credit report. But you're also making a previous account open. So now you have a new fresh line of credit. And if you are someone who is working to decrease your debt, um, you might not want to uh, move debt somewhere else. So now that you have a new fresh card, if it's a credit card that you are going to spend more on. Okay. And I'm going to talk about that a little bit more too, as we talk about some of your options for paying down debt. And again, try to limit the number of credit applications that you're opening. A quick tip, or just an FYI, since we're here, and this is a frequently asked question that I get. If you are in the market for purchasing a new car, for example, and you are looking for the best deal. So of course you go to LAPFCU first to see, what kind of rate that you can get from them, how much you can be approved for. But then you go to a dealership, and the dealership goes over, their different options for financing. If you do an application with LAPFCU, that is a hard inquiry. If you go to the dealership and you do an application with them, that is also a hard inquiry. However, if you are shopping, as it's called, for the best terms, the best rate, then that those two inquiries are not going to be looked at as you are doing applications because you want to buy two cars. Okay, as you are doing just that. You are shopping for credit because you want to get the best rate possible. So again, that's just kind of a frequently asked question that I get um, about credit inquiries. And if I do the application here, then I can't do the application somewhere else and possibly get a better rate. As long as you do them within, I believe the time period is somewhere between 60 or 30 days. So if you're doing applications every 3 or 4 months, then that's not going to be looked at as you shopping around. Okay. All right. So, establishing or reestablishing credit. There are steps that you can take. A quick fix to any damaged report is to go ahead and pay off all those old debts. Try to pay them in full. We always say, if you can, make some payment arrangements with that creditor. They might be able to help you with, maybe like a payment plan in order to get those debts paid. They might offer a settlement. Just be sure to review your credit report several months after you've paid off these old debts, just to make sure that information does get updated as you're making those payments, okay? Um, you can also apply for a secure credit card. So, secure credit cards, raise your hand if you are familiar with secured credit cards. How many of you are familiar with secure credit cards? Okay, I'm seeing a few hands. Good, good, good. So for those of you who are not, I'm going to lower your hands now. For those of you who are not, secure credit cards are really great products. If you are a s- in the you're trying to reestablish your credit, or if you're new to credit, perhaps you are, just turned 21, you don't have any credit history, you just got a new job, or your income is limited, you could go to LAPFCU and request a secure credit card. And essentially, what you'll do is put a deposit down. So you're creating the collateral for this credit card. So if you have a $500 secure credit card, that just means LAPFCU has an account. They put $500 that you have given to them in this account. This card is treated like a credit card, which means you would make charges on it. You will get a statement. The statement will come to you and tell you how much is due, when it is due. You'll make these payments, and all of this behavior is being reported to the credit bureaus. So that's the way how you can establish credit. And if you are looking to reestablish credit and you can't get approved for what's a non-secure credit card, then this is a really great route to take so that you can again start to reestablish. Okay. And again, LAPFCU has a secured visa, so you definitely want to reach out, ask some questions about that if you are looking to reestablish in that way. Keep in mind while you're in the rebuilding phase to keep your credit report accurate. You want to be sure that these moves are being reported and that they are meaningful. Okay, like I mentioned, you've been making those payments. You started this secured credit card. Make sure that that is being reported. Now, you can also ask a friend or family member who has a good credit history to co-sign on a loan or a credit card on your behalf. I always say this is a challenging ask, mostly because the credit behavior is going to show up on both persons' credit report. And so someone who has a good credit history, they might not be willing to take on the risk of co-signing for you, because essentially what this means is that co-signer is responsible for the debt in the event that you are unable to make the payment. So that's why I say it's a huge ask. If you do, however, have a friend, a close friend or family member who is willing to co-sign for you, be a good steward to that co-signer and make sure that you make payments, those promises that you made to make those payments that you actually do. Okay. Now, that same friend or family member who has an existing credit card in good standing, they might be less willing to co-sign for you, but they might be more willing to add you as an authorized user to one of their accounts. All right, so that's another maybe ask, an option for them. They say, hey, I can't co-sign for you, but in exchange to help you reestablish your credit, I'm willing to add you as an authorized user on one of my accounts. I'm not going to give you a card because I don't want you to run up my credit card. But my good credit behavior is going to show positively for you and help you on your quest. Okay. Make a note to remember how this authorized usership works, because I got to tell you a little something more about this. Okay. You do still have to be cautious with this option, because that primary user's behavior who has this, good credit history, for some reason, if they no longer have this good credit history, this behavior will also show up on your report. So it can be a positive, but it could be a negative too. So I always say, make sure you know who you're dealing with and working with. Okay. And because many credit reports contain mistakes, just make sure, again, you're reviewing that credit report for accuracy 3 times a year. If you can, 3 times a year, for sure, at least one time a year, because you can do that for free, um, on annualcreditreport.com. All right. I think I might be able to get that link added to the chat before we end today. It's also listed in your handout. Okay. Now, raise your hand if you've seen advertisement or have ever been solicited for credit repair. Have you seen any advertisement or been solicited for credit? Yep, I see some hands. I see some hands. Okay. So we like to say beware of credit repair, mostly because so much of it is scams. So they claim to have the ability to fix your credit and remove negative information. Some even say that they can create a entirely new identity for you, but I can tell you they cannot give you a new identity. Oh my gosh, where will we be if a credit repair company can create new identities? Oh, that's such a scary thought. So, in the event that you um, meet the requirement for a new social security number because something has happened, just know that a credit repair company is not going to be um, giving you that new credit or that new social security number. It's definitely going to come from Social Security Administration. Okay. So something that I wanted to share with you is something that I read on the Federal Trade Commission's website. It was a consumer alert, and it was about a credit repair company boosting service called piggybacking, right? Has anyone, raise your hand if you've heard of piggybacking as a method of improving your credit score? Okay, I do see, I see a hand that has gone up. So essentially the promise is to reestablish and improve your credit by piggybacking on the good credit of a stranger who is going to, as a result, get a fee for letting you piggyback off of them. So remember how I told you authorized usership works on a credit card and how it's essentially like a piggyback. I'll put you on my account as an authorized user. You then can reap all the benefits of my good credit behavior. So that's what this credit repair company was promising to do. As you can imagine, it was a huge scam. It's completely illegal. um, and not only was this company able to receive payments from people who were, down to receive the piggybacking, they also got the personal information, sensitive information from these customers. So just beware of credit repair companies. As a matter of fact, there are so many resources. Daniel's going to tell you a few of them when we get to the end, but there's so many resources that are available to you for credit counseling as it relates to getting these things fixed. And furthermore, I have to say this, anything that a credit repair company says that they can do for you legally, you can do on your own behalf and you can do it for free. So um, eliminate the middleman and just do it yourself. And one way that you can do that is by monitoring your credit and your viewing your credit report for free. So I mentioned this on a slide before about annualcreditreport.com. You can review your credit report annually for free. Right now, you can do it free every week. Ever since the COVID-19 pandemic, there was a rise in scams. And so they've made this service that you usually get once free per year per credit bureau. Now you can get once free per week per credit bureau. Okay. If you do happen to come across any inaccurate information, you want to dispute those and then report them directly to the credit bureaus. So, an example of um, something that's inaccurate on your credit report is you pull your credit report, you see that you have, um, or what's on your credit report is a Macy's credit card and it has a balance of $4,000, and you don't own have nor have you ever owned a Macy's credit card, you are going to go to each one of those bureaus to dispute um, that error on your credit report. Okay, and um, errors are possible. I can tell you, if you share a name, like a generational name with like your father or a parent, it is possible to have an account that does not belong to you, that belongs to grandfather who has the name, and you're the third, that it can appear on your account. So again, always, always, always dispute. Check for and monitor, and then dispute if you see any errors. Okay. Now, I do have a poll question for you since we're talking about your credit report, and it's a pretty easy one. And it is, when did you last view your credit report? Was it within the last month, maybe the last 1 to 3 months, 3 to 6 months ago, 6 to 12 months ago, or it's been longer than a year? So, when did you last view your credit report? And I'm going to close this one down a little quicker because I want us to get through the information. So I'll give you 3 more seconds, 2 seconds, and closing. Here's the results. And this is actually a pretty good mix, and I appreciate all of your honesty. So that's going to be my homework assignment for those of you who said it's been it's been a minute. If it's been a minute, longer than a year ago, for sure, I want you to take this annualcreditreport.com. Again, it is in that handout. I'm going to type it into the chat so that you guys can see it, and go ahead and take a look. Even if it's been somewhere between 6 and 12 months ago, 3 to 6 even, I would say, look, it's free for you each week. Check it out with each one of the 3 credit bureaus. Okay. All right. The role of money management. So, money management, it definitely is going to play a huge role in understanding how to master your credit. I always say, if you don't know where your money is going, if you're don't have a good handle on what's coming in and what's going out, then chances are you're going to have some challenges with also managing your credit, your debt, and your credit profile. And so, since so much of your score is based on payment history, part of every good system is going to know when those bills are actually due. And remember what I said, always pay and always pay on time. Now, if you have excess cash and you have some debt that you're looking to pay down, pay off, you want to try to put that cash towards paying down any revolving accounts and any collection accounts. And one good habit to form is to, instead of using credit for emergencies, develop an emergency savings account. An emergency savings account is somewhere between 3 to 6 months and even up to a year's worth of essential living expenses. If it sounds overwhelming, we always say start small. So don't think of the 3 to 6 or 12 months of essential living expenses. Think of $500 and then $1,000 for your starter emergency fund, and then just continue to build from there. This emergency fund should be liquid, meaning it is cash set aside in the account in the event that something happens and you need to use it. Okay. Now, show of hands, how many of you track your spending currently? You track your spend. Okay, good. Seeing a lot of hands. So for those of you who don't already, just make sure that you're aware of, again, where and how your money is spent, and make sure you're tracking your cash flow. There are so many different methods you can use. You can, what I call old school, and honestly, it's my best method. It's my favorite method. It's just write it all down. Okay, carry a notebook somewhere, write it down, put it somewhere where you can see it and you can always update it. And I always say you want to track your expenses, you want to track your income on a monthly basis because not every month looks the same. You can use a mobile or a computer app. There's so many apps out there that you can use to track expenses. We don't endorse any of them, but I like to Google what are like the top budgeting money tracking apps. Um, I like to read reviews, see what other people are saying about the apps, what the kinks are, and pros and cons basically. Now, in my opinion, keeping receipts, it is a method, but it's kind of an old school method, especially as we move to a paperless society. So, but it is still an option for tracking your expenditures. Include with that every time you use an ATM or if you're, taking money out, cash out of your account, then keeping up with those receipts and monitoring them. And then finally, you can also use those credit and debit cards, which I would assume most of us, that's the way that we are doing our tracking so that you know exactly what is spent, when it is spent, where it's spent at. Okay, quick because I have to make sure you haven't fallen asleep. Now I have to pose this question to you. What is your current method for tracking spending? Are you someone who likes to write it down your old school like me? Are you an app person? Do you actually keep receipts? Do the receipts, the jar of receipts. I think that was a method that people used before too. Do you use your debit and credit card statements to keep up? Or do none of these apply because you don't use this method or you just don't use a method at all? If you do have a different method not listed here, please share with us in the questions box. If you have something, I'm happy to read aloud for the good of the group, okay? Go ahead. I'm going ahead and closing this poll in 3, 2, 1. Thank you for participating. And here's our results. So it looks like most of you are using your debit and credit card statements, probably some of your online banking activity, right? So that you can keep track. That's a good method, especially if um, those statements and that online banking is sophisticated enough to kind of break down the percentages each month of your spending, right? What percentage is going to medical or food or bill paying, okay? 31% said you're writing it down, you're using a notebook. 19% of you are using apps. Share the apps in the questions box if you are willing. Again, I'll read a few of them aloud. And then 12% of you said, I'm not doing any of these. But I hope that you find that some of these are applicable to you and you want to use them. So let's talk living within your means. And as I get us close to wrapping up so we can get some of your questions answered. Living within your means may seem like a simple, common sense thing to do, but it can be very challenging. You definitely want to start by creating a spending plan or a budget that you can follow throughout the month so you can kind of keep yourself on track. If you find that you're spending more than you have, then you may need to look at prioritizing your spending. So you need to take an additional step and start prioritizing your spending. Consider what is actually your wants and what are your needs. And ask yourself, is it time to reduce, substitute, postpone, or put it off? It might be time to completely forego some of these wants that you have been indulging in. And if your cash flow is still negative, you'll have to find a way to increase your income. Quick examples of increasing your income: request overtime if it's available, getting some additional work, part-time job, doing some gig work, maybe finding a better paying job, apply for a promotion at your job. You can also sell assets to help pay down debt. Okay. Now let's go back to prioritizing your spending because this is where I think so many of us can use a little bit of a hand. Um, you can reduce your spending by simply cutting back. In the questions box, if you have an example of how you can reduce, again, I will read a few of those aloud. Um, Substituting by choosing a less expensive yet viable option. You can postpone by spending, um, by creating a spending plan and a savings plan and putting off that purchase until after you have actually saved enough to be able to to purchase with cash and not have to like put it on credit card. And then last, you can forego the expense completely by eliminating the purchase. I like to use the example of cable or entertainment, right? So let's say you have entertainment at home and you want to reduce your spending by cutting back. Well, one thing that you can do to reduce is maybe you don't need cable and um, all the different apps, the Apples, the Disney, the Netflix, the HBO, or the Max they're calling it now, the Paramount Plus, the Peacock. I can go on for days. Maybe you don't need all that, so maybe you can see a reduction there, right? Or perhaps you can substitute. You pay for cable. Cable is expensive. Maybe you can substitute that cable for a streaming app that is a little less expensive. I don't have it, but I hear Hulu is maybe an option instead of cable. Okay, so a substitute. You can postpone. So these streaming apps or this cable entertainment that you have, perhaps you realize in the summertime you do so much traveling, you vacation, you are with your kids, or you are just not sitting in front of the TV. Cut those things out, postpone them, do it later, right? Or if there is one big thing that you're saving for or that you're planning to watch or you want to have, then you just wait and you have make sure that you have the money free in your account and just postpone getting it. A friend of mine, actually not a friend, it's my cousin. She loved a show that came on Stars, and she said, "Okay, I only pay for Stars when that show was on. When the show is off, I disconnect my Stars from my cable because there's no reason for me to pay each month for it if I'm only um, watching it for my show." Okay, so and then last, maybe you don't need it at all. So you can completely get rid of all of those things that you're probably paying an astronomical amount of money for each month by completely foregoing. Okay. All right. So I just want to go back because thank you so much for some of your participation. One of the apps mentioned here that you can use for managing your money is Mint. I also see that someone says they're using Excel. Um, and using a calendar. I like it. Use a calendar for managing your funds. Okay, good, good. Now let's talk about deleting your debt. If you are looking to delete your debt, you can consider these two basic methods for effectively and efficiently repaying your debt. The first one is to increase your payments. Um, And we have a really great example in your handout. I hope we get a chance to get to it so you can see how increasing your payments can take time off of your repayment term, and it can also take the amount that you would have paid for that debt overall down significantly. You can also reduce your interest rate. You can reduce your interest rate by transferring your balance to a lower rate or by contacting the creditor and just simply requesting a lower interest rate. Okay? So of course, make a plan to repay your debts. You can always use the snowball method. The snowball method is paying off your smallest debt first, and then taking the money that you were using to pay down the smallest debt, and then adding it to the next smallest until you have completely paid it off. You could use the avalanche method, which is paying off your debt using that same philosophy but paying down your debts that have the highest interest rates first. So you go from highest interest rates to lowest interest rate with Avalanche. You go to smallest debt to largest debt with Snowball. Another strategy that's not listed that you could use to delete debt is to refinance. So First, you want to determine if this is the right option for you. And if it is, it might be a more effective way to pay off your debt. Um, the biggest mistake that you can make in refinancing is moving your debt to one place with a lower rate, but then now you again have this available line of credit that you are continuing to spend on. So it's going to keep you in the hamster wheel. LAPFCU can help you refinance, and you're going to hear more about this later. And while you're paying off your debt, try to save for other financial goals at the same time, even if it's a small amount towards something like your emergency goal or towards your retirement. Just know that your life does not have to be completely filled with paying off debt. You can still put money away at the same time. Again, it's just going to take a spending plan and a savings plan to help you get there. And here is your charge, your call to action. Um, Ask yourself, what can you do today? What can you do in the next 3 months? What can you do this year? Okay. And LAPFCU has a secured loan to help with installment debt. And remember that secured credit card that I mentioned? They also have that product to help you with rebuilding your credit. And now Daniel's going to discuss some of the awesome options and promotions that LAPFCU has available to you a little bit more in detail.
Thank you, Ray. And back to the refinance option you just mentioned, LAPFCU actually has a refinance and save promotion in which if you refinance a vehicle loan, credit card debt, personal loan, or a line of credit with us, we actually give you $200 for doing that. So you could essentially lower your monthly payments by getting into an LAPFCU product with a lower rate, and we're incentivizing you for doing that. So there's a website at the bottom, lapfcu.org/refinance-save. That's going to give you more information about the program. You can always call us. You can always visit one of our branches as well for more information on that particular program. Next slide, please. Now, within our online banking and your app, our app, you actually can check your FICO score, which is great. It's a great tool to have. Aside from the free annual credit report, you can actually view your FICO score that you have on file with us. This is what LAPFCU uses to determine your credit worthiness. Another thing that's really cool is when it comes time for taking out a loan with the credit union, you might actually already be pre-approved. So you want to check with us before you actually apply, because we run pre-approvals almost every quarter. So it's possible you may already be pre-approved for the loan that you're looking for. And what that does is it helps avoid an inquiry on your credit. So you want to check with us first, and then we can move forward with the process after that. Next slide. Now, as a member of the credit union, you actually have access to Balance, where our lovely presenter Ray is from. She's with Balance, and as a member of the credit union, you have access to Balance's services. They offer you financial education. They offer you free credit counseling. There's a lot of resources online. They can help you create a budget. They can help you increase your savings and lower your debt. Okay. That information is at the bottom, lapfcu.balancepro.org phone number. This information is going to be in your handout. You can always write this down or take a screenshot of this particular slide as well, but they'll be more than happy to help you, and as a member of the credit union, you have access to this particular service. Next slide, please.
All right, it looks like the next slide takes us to the end of our presentation. So this is the time where we do some Q&A. And I'm going to actually come back on camera. All right. And what I'm doing now is just opening up our questions box so I can answer some of the questions that you guys asked. Thank you. I know it was a lot of information that we covered today. There's one really good example I wanted to go over, but I want to be able to get to your questions. And if we have a little bit of time, I'll go over the example because I want to show you just how much just how much credit can cost you, and what are some of the things that you can do to eliminate that credit and get it paid off and done. All right, so I am going to the top, and I believe this question is for me. And Daniel, just chime in anywhere you'd like.
You got
um,
it.
so this question says, how does it affect you if the store closes your account for not using the card? And I have to tell you, it affects you the same way. And I feel like it's kind of puts you in a hard place if I'm saying keep your oldest credit lines open, and then you have a store account that you're no longer using. If once the store closes the account for non-use, then again, that positive credit history is going to go away. I would say if you no longer use that store card, you don't go to that store any longer, don't go spend money unnecessarily just to keep that line of credit open. I think that could probably do more damage than good. But if you have a revolving Visa credit card or a MasterCard, um, that's the type of account that you want to keep open. I say you can take something like gas if you have a gas powered vehicle, and just put your gas on that card and just make the payments, as soon as you get home or as soon as that statement comes, just so that you know that there is still some activity remaining on that account, which in fact, it makes sure that the account stays open. Um, a creditor can close an account for non-usage. And unfortunately, when they close that account, that positive credit history does go with it. So you do have to kind of be intentional in order to keep those accounts open. Okay, good question. Okay, I think we've asked that one. Um, oh, here's a question for you, Daniel. Somewhat related. Does LAPFCU have a like a referral program if they refer anyone for any of like the loans that you mentioned?
So there's no referral program for loans, but there's referral programs for memberships. So if you're an existing member and you refer a new member, whether it be a partner at work that falls within our qualifications, or it's an immediate family member, there are membership referral programs available, but not on the loan side.
A question about consolidating debt. So sometimes these questions, and I know there's a few people here who have a similar question about, well, why did my credit score drop for, I paid off my car loan. Why did my credit score drop? It should have increased. And there are a lot of intricacies to the analytics of credit scores. I can tell you that if you consolidate debt, if you are opening a new line of credit to consolidate it all in one place, and then you are also making more debt available as a result because you're moving it from one place to another, two things can be happening at once. You can have a negative impact because of this new line of credit, especially if you are close to that credit limit. But then you can also have a positive impact because now your credit report is showing available credit, and it's essentially showing balances paid off. Okay, so you can have a little bit of both that happens at the same time. Unfortunately, I wish there were numbers so we could quantify, but the way those analytics work, there is no like numbers for exactly how much it'll increase or decrease. I have a question, Daniel. How much more time can we go doing questions? I know we're right at our time, our end time, and I'd like to be respectful of you guys' time.
We could probably go an additional 5 minutes if we can
Let's do
get
about 5 more
through the
minutes. Okay.
remaining questions.
Okay,
Okay.
perfect. Um, so there's a question here about a credit score dropping 60 points in less than 2 months, um, and not being able to understand why. The first thing I would say is definitely go to annualcreditreport.com. I know if you're used to using things like um, Credit Karma, for example, to view your credit score, and it's not a bad method, but you want to go to the official bureaus, and the way that you do that is go way that you do it for free anyway is to go to annualcreditreport.com. I will go line by line, and just look at um, the activity and make sure that there are no new accounts or inquiries on your credit report. Okay. And when Daniel mentioned that you have a pre-approval, that is not something that hurts your credit score. The only uh, An inquiry is the only thing that can cause your credit score to drop, and an inquiry has to be, you have to give permission to for Daniel and LAPFCU to run your credit. Okay, so that's not something that's going to cause your credit score to drop a pre-approval, but it's a good way of knowing before actually doing a credit application.
Okay, Ray, we had one question that came in prior to this evening's presentation, and it was
Okay.
primarily about um, due dates and closing dates. So what's the difference, and what is the better way to go about making a payment to increase credit score?
The due date and the closing date. Okay.
And the closing
So
date.
yeah, so based on my understanding with credit, and this is a little bit of a loaded question because Daniel can probably speak more specifically in terms of um, when the credit union actually does their credit pulls when you go to apply for a loan and what credit score they see. But yeah, so um, you your credit due date is just that. It's going to be what you see, and I might be able to pull up a sample here. Um, it's going to be what you see on, if it's, a revolving account, what you see on your statement. Now, the closing date is when that bureau actually takes the information from your credit report. And like when Daniel talks about you being able to see your FICO score from the app, um, that time period is going to be based on when those bureaus are closing. And it's not necessarily when you've made your on time payment on your credit card, if that makes sense. So, for example, if let's say your credit card is due on the 10th of each month, but Experian closes on the 5th of each month, then if you still have a balance on that credit card, though it's not delinquent, Experian is going to pull based on their closing date and not on when that account is due. This is good to know if you are going to apply for um, a loan. So, from what I've been told from some people who do like mortgage loans and stuff, is that um, if you have bills that you are planning to pay, make sure that you apply for your loan after you have paid those bills, because otherwise your report is going to show you owe X amount of dollars on this credit card, even if it's like, $5,000 and your plan is to pay it by the due date.
I'll add a
Okay.
little bit to that as well,
Sure.
Ray. If in simple terms, if the closing date has a balance of credit that you've used, that's what's being reported, right? So if you've used $100 that's what's being reported to the credit bureaus. Now, if you're going to pay that off in 10 days or so, you're going to chop that down, but that won't be reported until the following cycle. And if you use your
Correct.
card again, you're just stacking debt on top of each other. So if you do want to get ahead of it, make a payment before that closing date, and that lesser amount will be reported to the bureau.
Absolutely.
Awesome.
Thank you. I feel like in a roundabout
And
way I got there, but
yeah, we got there. Yeah,
we
I had
got
to simplify it for myself as well. So, Ray, thank you very much for your participation tonight. To the viewers at home, I put my contact information in the chat. If there's any questions that went unanswered or you have any additional questions, feel free to contact me directly and I'll get those questions answered for you. One thing I didn't mention earlier on is that this recorded webinar will also be in our YouTube page. So feel free to like us, subscribe to us on YouTube, Los Angeles Police Federal Credit Union. You'll see all our webinars covering various topics. A lot of these are done with balance. All right. So we appreciate your time. Thank you very much, Ray. And everybody else, have a good evening. And we hope to see you on the next one.